Okay, let's unpack this.
Yeah.
You know that feeling?
Which one?
The one where it seems like, I don't know, a new crypto launches every 5 minutes.
Yeah, totally.
Each one promising the moon. And you're just sitting there trying to figure out, okay, what's real hype and what might actually, have some substance.
Right. Which ones are going somewhere versus just fizzling out.
Exactly. So today on the deep dive, we're going to try and cut through some of that noise. We're really zeroing in on a specific case study, BlockDAG. Looking at their recent launch, what some are calling a masterclass, and really digging into their strategy, specifically around exchange listings and building their community.
Yeah, and what's really striking, I think, is the apparent level of strategic thinking behind it. It doesn't feel random.
No, it doesn't.
We've been looking at some analysis that really breaks down their moves, from the first announcements to how they're drumming up excitement.
So the mission here.
Right. The mission for this deep dive is basically to get under the hood, understand the logic, what makes BlockDAG's strategy actually stand out in this, let's face it, incredibly crowded crypto space.
Think of this as your fast track, maybe, to getting informed on this particular launch.
Exactly. Without having to scroll through endless Telegram chats and Twitter threads yourself.
Okay, so where do we start? I think the thing that first kind of jumped out at me was this idea of overdelivery.
Ah, yes. The exchanges.
Right. BlockDAG initially said, okay, we're aiming for 10 exchanges. Pretty standard goal.
Reasonable.
But then, boom, they've actually locked in listings on 20 exchanges.
Double
the promise. And this is where it gets really interesting.
Because it taps into that classic business playbook.
The under-promise and over-deliver thing.
Right.
Yeah, it reminds me a bit of Apple, back in the day with the one more thing.
Right. That surprise extra that just leaves everyone buzzing, it builds goodwill.
Totally.
And if you think about that in the crypto world specifically, it's powerful.
How so?
Well, it's a space where, unfortunately, delays and missed targets aren't exactly uncommon.
Sure.
So coming out of the gate and delivering way more than you said, that can be a huge trust builder. It generates real excitement.
Sets a positive tone right away.
Yeah.
Like, okay, these guys mean business.
Exactly. It suggests competence, ambition. It can be really reassuring for people thinking about getting involved.
Okay. And it wasn't just doubling the exchanges, was it? It feels like they've layered on the pressure, the anticipation.
Oh, definitely. It's multi-layered.
You've got the hard deadline, June 13th for the launch.
Yeah, clear date.
Then the pre-sale price, that 40,00020, that freeze lifts on the same day. So potential price action.
Adds a bit of market dynamic right at the start.
And then the really intriguing part, they've only named 5 of those 20 exchanges.
Right. The other 15, still a mystery.
That's clever. Plus, they've got this huge 150 million BDAG coin giveaway running.
The prize pool.
It feels like they're hitting you from all angles to get you paying attention.
It's quite calculated, isn't it? That layered approach. The date gives focus. The price thaw hints at immediate potential gains or losses.
Right.
And holding back most of the exchange names, that creates a massive curiosity gap, as they call it.
But how do you do that without people getting annoyed or thinking something's fishy?
Well, that's where the big prize pool comes in. Like you said, 150 million BDG is a serious incentive.
Keeps people engaged?
It keeps them engaged, encourages participation, keeps the project front of mind. It's basically pouring fuel on the FOMO fire, the fear of missing out.
Right, FOMO. Okay, but it's not just hype and FOMO, is it? They seem to be building belief, too. That social proof aspect.
Absolutely essential.
I mean, raising $238 million in a pre-sale? Wow.
That's a staggering number.
That sends a pretty clear signal, doesn't it? That early investors have some serious confidence here.
It really
220,000 holders already.
Yeah, that's significant.
That's a big crowd already backing this.
And that creates its own momentum, right? The bandwagon effect.
Ah, right. People see others getting involved.
And it makes them feel more confident joining in themselves. It feels less risky somehow.
And that ties back to revealing only 5 exchanges initially, too, I guess.
Exactly. It fuels that curiosity. People want to know where else they'll be able to trade this coin. It gets them talking, speculating, amplifies the buzz.
Okay, let's dig into those first 5 then. Because the selection seems, well, strategic.
It does look thought through.
You've got MEXC, known for high liquidity, especially in Asia. Why is that important?
Well, Asia is a huge chunk of the global crypto trading volume.
Yeah.
So high liquidity on MEXC means lots of buyers and sellers are there already.
Easier to trade, more stable price maybe?
Generally, yes. It makes for a smoother entry. Then there's LBank.
Which is big for altcoins, right? The non-Bitcoin cryptos.
Precisely. Listing there suggests they're targeting traders who are actively looking for new opportunities, people exploring beyond the big names.
Makes sense. Okay, then CoinStore. You mentioned emerging markets access.
Yeah, CoinStore has a good presence in regions where crypto adoption is growing fast, but might not be dominated by the huge global exchanges yet.
So reaching a different audience, potentially.
Right. Broadening the base, diversifying the holders. Then xt.com, that brings in derivatives.
Explain derivatives quickly for anyone maybe not familiar.
Sure. They're basically financial contracts that get their value from an underlying crypto asset. Think futures or options. Listing on xt.com attracts maybe more sophisticated traders interested in those tools.
Adds another layer of trading activity.
Potentially, yes. And finally, Bitmart.
A gateway for U.S. and European retail.
Exactly. Bitmart's got a big user base in those key Western markets, so it's crucial for reaching everyday individual investors.
Wow. So those first 5 alone cover a lot of ground Asia, altcoin traders, emerging markets, derivatives, US-EU retail.
It really seems like a deliberate play to establish credibility quickly and tap into very different investor pools across the globe.
And the thought of the other 15 hitting all at once on June 13th.
Yeah, that liquidity tsunami idea they're pushing, it could certainly cause a massive spike in activity as all these new trading venues open up simultaneously.
But it's not just about the exchanges, right? They're actively trying to grow the ecosystem, too. These buyer battles.
Yeah, the gamification aspect.
They started with 25 million BDAG prize pool.
Oh.
Okay, nice. Then 100 million, now 150 million.
They keep upping the ante.
It feels like a game level up the rewards.
It's clever psychology, isn't it? Constantly increasing the prize pool keeps people engaged, incentivizes them to keep participating, maybe even invest more. It builds momentum.
And the referral system, too. 25% back to the refer, 5% for the new person.
That's quite generous.
It's a strong incentive to spread the word.
Yeah.
I mean, think about it. 220,000 holders. If each one just gets, say, 1.2 other people interested on average.
You do the math. That's potentially another 264,000 users.
That's how things can go viral, right? Exponential growth.
It's a classic, effective strategy for organic growth. That tiered system really motivates current holders to become recruiters, essentially. Creates that network effect.
And here's something else I found interesting, the miner delivery timeline.
The hardware.
Yeah. It's like they're shifting from just a digital coin to something tangible. It gives people what you called psychological ownership.
Exactly. Even before the physical miner arrives at their door.
It reminded me of, when you pre-order a new games console or VR headset you're really excited about.
Totally. That anticipation builds commitment. Waiting for the physical thing makes it feel more real, reinforces your decision.
Yeah, it's not just numbers on a screen anymore.
It's a smart move. It transitions the project towards tangible utility, real-world application.
Yeah.
Strengthens that long-term belief beyond just speculation.
Okay, let's zoom out a bit. We saw this comparison chart. BlockDAG versus Solana's 2020 launch and Avalanche's 2021 launch.
Right, putting it in context against some established players. For anyone listening, layer ones are those foundational blockchains like Bitcoin or Ethereum.
And the numbers are pretty stark. Initial exchanges. BlockDAG with 20, Solana had 8, Avalanche 12.
Big difference there.
Presale raise. BlockDAG's $238 million towers over Solana's 25M and Avalanche's 42 Luminous.
Again, just a different scale.
Community size at launch seems bigger, too, for BlockDAG. But the really interesting bit was the unique weapon.
Every project needs its angle.
Solana had its speed narrative, Avalanche had its subnets, BlockDAG has its miner network.
And that's a key differentiator. While Solana and Avalanche focused on transaction speed or network structure, BlockDAG is integrating this whole other layer, the infrastructure for decentralized mining, using their hardware. It's a different kind of value proposition.
It adds a whole physical dimension.
Yeah, exactly.
But of course, no launch is perfect. There are always potential hurdles.
Always risks to consider.
The analysis we looked at pointed out a few, right? Could the trading get spread too thin across 20 exchanges? Liquidity fragmentation.
That's a valid concern. Diluted liquidity can sometimes make price discovery less efficient.
And what happens when that 0.00020 price freeze ends? Potential volatility.
Very likely. Lifting a price floor often leads to price swings as the open market takes over. Standard stuff, but needs watching.
And just the logistics. Making and shipping all those miners, that's a big operation.
Huge undertaking. Manufacturing, shipping, customs, lots of potential bumps in the road with physical hardware at scale.
But the analysis also suggested they might have some plans for these. Contingencies.
It seems so. Like, the phased reveal of exchanges, even though it's 20 total, might soften the initial liquidity shock compared to dropping all 20 names at once.
Okay.
The price anchoring during the presale might provide a bit of a psychological baseline, maybe lessen the panic if there's an initial dip.
And they're showing videos of miners being shipped. Transparency.
Right. Stuff like that, being open about the shipping process, can help manage expectations and build confidence that things are actually happening.
Okay, and just thinking about that final push before the June 13th launch, they're planning to drop daily clues about the mystery exchanges.
Yeah, between June 1st and 12th, little hints like exchange #6 starts with a K.
That's pretty smart. Keeps people guessing, talking.
Definitely keeps the buzz going, taps right back into that curiosity gap.
And releasing miner unboxing teasers during that time, too.
Double whammy. Reinforces the tangible aspect, builds the excitement for the hardware arrival, keeps engagement high right up to the launch day.
So wrapping this up, it really does feel like BlockDAG has pieced together a very deliberate and multi-layered launch plan.
It seems that way.
We've talked about the over-delivery on exchanges, engineering that urgency and excitement.
The deadlines, the mystery.
The power of that social proof, the huge raise, the big community.
The strategic choice of those first 5 exchanges.
And all the levers they're pulling for growth, the buyer battles, the referrals, the miner anticipation.
Yeah, this whole deep dive really highlights how sophisticated crypto launches are becoming. It's not just tech anymore.
No, it's market dynamics, community psychology, strategic execution.
Exactly. BlockDAG's playbook here is definitely a fascinating case study in how you approach a launch with real strategic intent in today's market.
Definitely gives you a lot to think about. And on that note, here's going to be a final thought for you, the listener, to chew on.
Okay.
Considering BlockDAG's strategy of holding back the names of 15 exchanges until the actual launch day, what do you think?
Yeah.
What are the potential upsides and downsides of that for the project's long-term health, for community trust?
Is it a masterstroke for maximum impact?
Or does keeping things so close to the chest risk putting some people off who prefer total transparency up front?
Interesting question.
Definitely something worth mulling over, maybe even digging into a bit more yourself.